Hello, everyone, and welcome to the Smart Investor Podcast. We were away over the holiday season, and this is our first podcast after the holidays. So I hope everyone had a happy holiday and really enjoyed the holidays. And we're back in January, and it's time to look at the markets to see what exactly is happening. The big news that happened this week was the effect of the Swiss decision on the markets, and the Swiss decided not to continue its peg against the euro, which sent the Swiss franc soaring. So that was a big news that occurred this week. But we'll get into that, and we'll also get into some detailed analysis of what exactly is happening in the markets. But first, just some announcements. There are folks who have been asking for video analysis or to see the charts while I speak. So what I have done is that you can see the charts of what I am saying via video format if you go to smartinvestorcentral.com/video. That's smartinvestorcentral.com/video. You'll be able to see the video version of the podcast. So again, smartinvestorcentral.com/video, where you'll be seeing the chart analysis in real time in what we're speaking about. Okay, so moving on, and we're getting back down to work. Let's firstly take a look at the S&P 500 stock index. And for those of you who can see the video, the chart is up now. And what we have is that the S&P 500, let's just review what has happened since the start of the year. We see that the market opened around the 2060 level. Actually, the actual opening was 2058.90. And since then, the market has declined slightly, went up again, and declined again in a very tight range. So for the year so far, the low on the year is 1,988, and the high on the year so far is 2,064. Remember that the all-time high in the S&P 500 is 2,093. So what we're seeing is that the market is in a slight consolidation mode. We see that it's consolidating between the 2,090 level and the 1,980 level. Major support in this market comes in at the 1978 level, which is depicted on the chart. If we see that the market breaches this 1978 level, that could open up the downside further. And critical support is at the 1,820 level. If we see the market go below 1,820, that would put the bull market in some question, and we may see a wave of selling in the market. So that's what's happening in the S&P 500. Taking a look at the Dow Jones Industrial Average, and the chart pattern looks pretty similar to that of the S&P 500, with critical support is at just above the 17,000 level. So 17,067 is our critical support, and longer term support is down at 15,855. If we see the market breach the 15,855 level, that could spell an end to the long term the long-term patterns of higher highs and higher lows in the markets. So that 15,800 level is critical support. And remember, one of the reasons why we take a look at what's happening in the charts is that it gives you a visual representation of what is happening in the markets. Like I have in front of me a picture, a chart of the rally in the S&P 500, in the Dow Jones Industrial Average, and we can see a very smooth uptrend that has happened. So we could see that the market is trending upwards. Looking at the chart will give you a visual picture of what is happening in the markets, because the market the uptrend will end when the market starts to experience a series of lower highs and lower lows, and that's what we're looking out for. So long term, and the long term picture right now is that the market is in a uptrend, and as long as the market is in an uptrend, the strategy in an uptrend is to buy the dips in the uptrend. And if I see the market go below 15,800, that would bring into question the validity of this particular uptrend. Now, taking a look at the Nasdaq, and we are going to analyze the Swiss franc and the Swiss decision shortly after we look at the equities. The Nasdaq, similar chart pattern to what is happening in the Dow and the S&P 500, with support is at the 4,100 level, and the critical support is down at the 3,700 level, as depicted on the chart here that you can see. Okay, taking a look at the European markets, we see, firstly, let's take a look at the German DAX. And I spoke about the fact that the markets were diverging late last year, but what is happening now is that the markets is diverging again. The German DAX is actually rallying and made a new high last week, up at the 10,167 level, which is fairly positive for the long term, or not the long term. It's positive for the health of the markets when we see all the markets in sync. So the German DAX made a new high up at 10,000. The high that was printed was 10,207, and that's an all-time high in the German DAX. Taking a look at the monthly chart, we see this is an all-time high in the German DAX. Now, support is down at the 9,600 level. We have support at 9,600, and better support is at the 9,200 level, and long-term support is at the 8,400 level. Because we have hit a new high, the resistance points are difficult to see, and because we are entering new territory. So resistance is at the all-time high of 10,200 at this point, but there's no chart, there's no price action above the 10,200 level. So we are essentially charting new waters in the German DAX. Taking a look at the FTSE, and we see that the FTSE was always diverging from both the S&P 500 and the German DAX. And taking a look at the chart, we see that the FTSE has stabilized somewhat. It's still not making an all-time high, but the S&P 500 is not making an all-time high either. So and we see that it is not falling at this point in time. So that's very positive. Now, Critical support in the FTSE is down at the 6,200 level, or I would say 6,100. If you see this market close below the 6,100 level, that would be very bearish and would spell the end, I would say, of this particular rally in the FTSE 100. Taking a look at what happened in the FTSE over the past year, we opened the year down at about 5,900 and closed the year at the 6,600 level. So the rally in the FTSE was not as significant as what happened in the S&P 500. And to give you some perspective, the S&P 500 opened the year at the 1750 level and closed out the year near the 2000 level. Okay. Going back to the FTSE, we see that critical support is, as I said, at the 6,100 level, and resistance is up at 6,780 and also the 6,900. Those are the two overhead barriers to the FTSE. Taking a look at the gold market, we see that, and for those of you who are seeing the video here, we see that the market broke out of a triangular consolidation pattern. But in gold, we still have a series of lower highs and lower lows, as I'm drawing here. Lower highs, lower lows. So until this series of lower highs and lower lows is broken, this market will remain bearish, and the momentum will continue to be on the downside, or the sellers would be in control. There are a lot of folks who are always, I mean, for the last 2 years, I've been hearing folks talking about gold is going to rally. Every week they write that gold is going to rally, gold is going to rally. I do not advise that investors try and catch a bottom in a market. When gold starts to rally, you will start to see a series of higher highs, higher lows in the gold market. And that would be a good time to be on the buy side of the gold market. But for now, the market is experiencing lower highs and lower lows. Taking a look at, let me just draw the prevailing trend line. We see that the market is coming up against onto an area of resistance for the gold market, and that's around the $1,300 level. If we see the market close above 1,300, and 1,300 is pretty strong resistance, if we see the market close above 1,300 and 13, the next area of resistance will be up at the 1,350 level. And if we see that the market can close above 1,350 and ultimately 1,400, then that could be a sign that this market is turning around. So I'm going to keep an eye on the gold market, but 1,400 would be my trigger to say that I can start being on the long side of the gold market. But for now, the momentum in the gold market is still on the downside. Okay, taking a look at crude oil, and oil has been, as you can see, there has been a huge decline in the oil market. I mean, the high that was made in June was about around the 108 level, and we have seen the market just take over a 58% decline and is currently at the $48 level. I mean, just a massive decline in the oil market. So the trend in oil is down, and luckily for consumers, we will get some reprieve at the gas pump. So that is a positive there. Okay, so let's take a look now at the Swiss franc and see what happened this week. And to put what happened this week in context, let's go back to 2011, or the months before 2011. And let me just pull up the chart here. In front of me, I have the weekly chart of the euro versus the Swiss franc. And what we saw coming up to this point in time was that the market was declining, meaning that the euro was declining versus the Swiss franc. Market was in a pretty strong downtrend, which is a series of low highs and lower lows. So the market was in a pretty strong downtrend. And remember if you want to see the charts and you're listening to the podcast, just write down the URL smartinvestorcentral.com/video, and you'll be able to see the charts of what exactly I'm speaking about. Okay, so coming into 2011, the euro was declining versus the Swiss franc, and the Swiss central bank was worried that the Swiss franc was gaining versus the euro too rapidly. So what they did was that they announced that they would peg the euro to the US. They would peg the euro Swiss franc to around the $1.20 level. And as you can see, this is a weekly chart. I have in front of me the weekly chart of the euro versus Swiss franc. It declined from a high in 2007, just before the financial crisis. What happened during the financial crisis was that the Swiss franc started to gain versus the euro. Okay, so the euro was falling versus the Swiss franc. So the market fell from a high, the euro versus franc, a high of about 168 down to $1.25, or €1 25 to be more exact. Now, what happened is that the market in 2011, the Swiss franc reached just above parity versus the euro, and the high was at $1.71, and the Swiss central bank was a bit worried that the euro was gaining versus the Swiss franc, so they announced a peg. And in front of me you have the chart, and that peg was announced, the peg of $1.20, and that was announced in September of 2011. And we see that the market rose, the euro rose pretty significantly versus the Swiss franc, because before the announcement it was at just above $1.10, or €1.10, and or €1.10, sorry. And after the announcement it went to 120.64 and went up to 122. And over the last 3 years, what we see is that the market has stayed above the 120 peg that the Swiss bank was maintaining. And as you can see on the chart, I mean, the price action was just very range bound and settled down at the 120 level. Okay, so this occurred for 3 years, and what happened this week was that the Swiss National Bank announced that the peg is over. And as you can see, or for those who are looking at the chart, you see that the market moved from the 120 peg all the way down to the 90, even went as far down as the 86-cent level, and it settled down at 97 on that day. And this was This was the 15th of January. So in one day, the euro lost over 20% of its value to the Swiss franc. And that was a huge move in the markets. I mean, for a currency to appreciate by 20% in one day, it's a once in a decade occurrence. I mean, just to put into perspective, last year the Russian ruble essentially underwent a huge decline versus the US dollar, and it went from a low of 35 up to 80. But all of that did not happen in one day. It took the entire year for the Russian currency to lose over half of its value versus the US dollar. Actually, more than half of its value. But that took a whole year. What we saw was that in one day, 20%, the Swiss franc gained 20% versus the euro, and that sent shockwave throughout the markets. Actually, there are a number of currency brokers, forex brokers, that was struggling for liquidity, and I know one in particular had to get some backup financing because to cover customers' losses that occurred in their accounts and to boost liquidity. So that was the huge event that occurred last year in the markets. And for those of us who participate in the markets every day, I mean, it's one of those events that you will remember for the rest of your life. Like I will always remember the day that the Swiss franc appreciated against just about every major currency. Now, in front of me is a chart versus the euro, but we can take a look at the Australian dollar that also fell from 84 cents to the 70-cent level versus the Swiss franc. We can take a look at the US dollar versus the Swiss franc. The US dollar was at $1.02 versus the Swiss franc, and after the announcement, it went down to a low of 74 cents and settled down just above the 85-cent level. That was against the US dollar. Against the British pound was at 155 versus the Swiss franc, and it went down to 129. So across the board, we see that the franc appreciated versus just about every currency. The Canadian dollar from about 85 down to the 71-cent level. So this was a broad move, and it will be interesting now to see what happens next week. Will the Swiss franc continue to gain, or will the market stabilize? This is what we're looking to see, or this is what we're looking out for next week as traders in the market. This is very important. And for those of you who are curious as to what happened to gold, gold was at the 122, just above 1,220 level, and it rallied some $80 over the next 2 days as a result of this decision. I guess it was a safe haven move on the part of gold investors. Okay, so looking forward to what we're looking out for next week, where, as I said, for the major US stock indices, we're looking to see if these support points that we speak about, or we spoke about, the 1960 level on S&P 500, if the market remains above that, or will the market continue to decline. And I forgot to mention, taking a look at the VIX. The VIX currently is at, after the Swiss decision, the VIX did spike from this just above 16 to the 20 level, 20 So that was a pretty good spike, but not nothing. I guess U.S. equity investors was not, they weren't all that concerned about the Swiss decision. Okay, so I hope you enjoyed this version of this edition of the show, and I hope that you are more aware of what's happening in the markets. And just remember, as an investor, and if you have money in the markets, it's important for you to know what is happening with your investments and what is happening in the markets, because these markets, as we saw last week, these markets can move very quickly, and if you don't stay on top of what is happening, then you could find yourself in some problems. And folks who are successful in the stock market are folks who pay attention to what is happening. Okay, so again, for you, if you want to see a visual representation of what happened on the podcast, go to smartinvestorcentral.com/video. And I hope you enjoyed this episode, and I hope you have a good week. Thank you very much for listening.